Okay, welcome everyone once again. So in this video, I'm going to be showing you um, Fibonacci retracements and then multi-time frame analysis. So let's get going. In the previous video, we talked about identifying supports and resistance, identifying buyers and sellers, breakout and retest. So we are moving gradually to Fibonacci, key levels, then multi-time frame analysis. So Fibonacci, what is Fibonacci? Fibonacci is just a retracement tool that is used to know whenever the market is going to reverse. Maybe it is moving in an upward trend, then you want to know that you want to know when the market is going to start reversing to the upside or to the downside. So Fibonacci, there are some rules to Fibonacci. Like I said, Fibonacci is just a retracement tool here. So when you're using Fibonacci, you should know some things. So let's start. Let's get going. Fibonacci rules. Draw from swing high to swing low in a downtrend. Draw from swing low to swing high in an uptrend. Okay, so let's stop there. Let's just stop there. We're going to be looking at the rest when we continue. So let's use 24. Okay. Yeah, so these are the rules to Fibonacci. These are the rules to Fibonacci. When you are in an uptrend and you want to draw your Fibonacci, you draw it from the lowest point to the highest point. But whereas when you are in a downtrend, when you want to draw your Fibonacci, you draw it from the highest point to the lowest point. So let's get to it. The drawing panel. This is the drawing panel. So this is where you're going to have your Fibonacci. You know this. This is the Trading View application. So you check for which one has Fibonacci. This is it here. I've already started. So you click on it. Once you click on it, you're going to get something like this. So you can see here, this is a minor uptrend on the 1 hour time frame. Can you see? Higher low, higher high, higher low, higher high. Then it's trying to reverse. This market is trying to reverse because it didn't retest the previous high that was broken here. So I'm trying to sell now. Can you see my sell tool is already here? I'm trying to sell at that point. So, but for now, this is an uptrend. So when you want to draw this Fibonacci, you draw it from the what swing low to swing high. You draw it from the lowest point to the highest point because it is in an uptrend. So let's draw it. So can you see how I've drawn my Fibonacci from the lowest point to the highest points? That's how to draw a Fibonacci on an uptrend. Now these are some numbers here. So these numbers are the psychological numbers or the relevant numbers in the Fibonacci, whereas they act as support and resistance when the market tries to touch them. Now you can see this 0.236 at this point. 0.236 is acting as support at this point. It's acting as support at this point. So it means when the market tries to break and retest this 0.236, you can also take a sell. So this through 0.382 here is acting as resistance at this point, acting as resistance at this point. The market broke it and is trying to retest it. Can you see? But it's not really clear, but at least you can see that the market is trying to obey the Fibonacci. So what is this Fibonacci mainly used for? For example, maybe you want to take a trade and you want to use Fibonacci because you want to confirm if that place is a good place to sell. For example, you want to sell at this point. Now you can see that the market is at 0.236 here on Fibonacci. So it will be very nice of me to wait for the breakouts to these points and take a sell on this Fibonacci when it is retesting the Fibonacci tool at this point. So I can also take a sell here because I'm seeing an head and shoulders pattern already. And this Fibonacci tool is showing me that this place is a support area on the market, then I can take a sell here when it's retesting the Fibonacci. So that's the way the Fibonacci is used on an uptrend. While on a downtrend, you draw it from swing high to swing low. So this is the downtrend. This is a downtrend, for example. So the rule says you draw it from what? The swing high, the highest points. You draw it across the wick to what? To the swing low, to the lowest points. So as you can see here, I've drawn it from the highest points to the lowest points. Now, when you are trying to check the Fibonacci tool, you can see that some numbers are stronger than the other. Like this 0.6 is strong, 0.5 is strong, and 0.382 is strong because those are the ones in the middle. Now you can see 0.618 as acting as resistance at this point. You can see very, very clear. You can see it's very, very clear. Market is acting as 0.61 is acting as resistance at that point. Can you see? So it's acting as resistance at that point. 0.5 is also acting as resistance, broken out, turned to support already, broken out again, turned to resistance, acting as resistance, broken out, then turned to support. So Fibonacci 2 can also be used to locate support and resistance. 0.382, you can see that place is acting as support on its own. This place to support, broken, retested, turned to support again. So that's the way it works. 0.236, can you see acting as support here, then broken out, resistance, sold a little, then started going up again. So that's the way Fibonacci 2 works. It's once the market is about to reach a particular number on the Fibonacci, you should know that that number can act as it can act as reversal area because markets can reverse at any point when it is getting to that number. So that's the way to use Fibonacci. That's the way to use Fibonacci. For example, I want to take a sell here. If I want to take a sell here and the Fibonacci is showing me that this point is 0.618, then I'll be very sure that that place is a good resistance. But from what I can see, when I draw my Fibonacci, no information is there, no number is there at that point. So the 0.618 is still here. You can see acting as support area. Can you see? So this is still 0.618. Now 0.236, like I said before, I can take a sell when it breaks and retest this place clearly. All right, so that's the way Fibonacci is used. Fibonacci is also used as support and resistance, but don't rely too much on Fibonacci because you cannot draw support and resistance on your own. Fibonacci is just a retracement tool whereby when the market touches the Fibonacci numbers, it tries to react to those numbers. So if you want to jot something down, you can jot down. So I'm going to take a little time here. Fibonacci rule: draw from swing high to swing low in a downtrend. Draw from swing low to swing high in an uptrend. It means in a downtrend, draw from the highest point to the lowest point, while in an uptrend, draw from the lowest point to the highest point. That's just the simple meaning. And Fibonacci can also act as support and resistance, like you've seen here clearly. It can act as support and resistance. Now let's move to key levels. Then we go to multi-time frame analysis. So what are key levels? Key levels are institutional levels. These are the levels that banks use most of the times. Let me use another chart. I don't want to confuse myself because I want to take a trade on CAD JPY. So I'm trying to use CAD JPY. So key levels are institutional levels whereby market reacts to as it is moving in an upward trend or a downward trend. Key levels, not so much about key levels. I'm not going to emphasize much about key levels, but you have to know what key levels are. So let's move. Key levels are institutional levels whereby the market reacts to as it moves in an upward trend or a downward trend. You can see that as market was moving in this upward direction, it was rejecting at some areas. It means it was reversing strongly in some areas. You can see as market was going up, it came down at this point. So those are the key levels. As market was going up again, you can see it because it was going down at that point, it was rejecting at that point. Can you see that place too is a key level where I've even drawn already? So there's nothing hard about key level. Just spot the places that markets reacted to, market rejected as it was moving in the upward trend or in the downward trend. Can you see? So those levels are the key levels. You can see how market reacted to this place. Now, when you want to know if a key level is strong, you can just go back a little bit. You can see the key level I've drawn at this point is still acting as support and resistance. It's just like the Fibonacci. When you can't draw Fibonacci, you can draw key levels. It's almost the same thing. So you can see here, this acting as resistance, 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 then broken, retested, support, resistance again, sorry, support broken out became resistance. So resistance at these higher points, you can see support become resistance. So that's something about key levels. It's like manual Fibonacci. When you can't draw your Fibonacci, you can just draw key levels and then you are good to go. So when you can't draw Fibonacci, you can use key levels. It also acts as support and resistance, as you have seen. So I'm not going to emphasize much on key levels. I'm going to move straight to multi-time frame analysis because I don't really use key levels. I only use the Fibonacci. So I only use Fibonacci, then I'm done. Because Fibonacci is faster. Instead of drawing, looking for key levels, you can just draw a Fibonacci and then you are good to go. So let's move to multi-time frame analysis. So I don't think I need to do any recap again from what I just explained. Multi-time frame analysis is the most important here, as we can see, is the most important so far. So I'm going to be explaining more on multi-time frame analysis. What is multi-time frame analysis? Multi-time frame analysis is the analyzing of the charts from the higher time frame to the lower time frame. So as the name has said, it's multi-time frame analysis, meaning you are using different time frames to analyze the market. Now, don't forget, we are still under technical analysis, talking about using what has happened in the previous charts to predict what is going to happen at the moment. So that's what we're trying to do. So multi-time frame analysis. Now, we've talked about support and resistance, which is most important. So we've talked about trend lines also, which is also very important. Now we're moving to multi-time frame analysis. Like I said, multi-time frame analysis is the um, use of different time frames to analyze the market, starting from the higher time frame to the lower time frame. If you have a jotter, please jot this down. Multi-time frame analysis is the analyzing of the market using the higher time frame down to the smaller time frame. Now, what do I mean by the higher time frame? This is 1 day time frame. It means these candles here. At least you know the meaning of candles. You done that in the in the free class and the basics class. This is a candlestick. The red one is a candlestick. When it is on 1 day time frame, it means one candle is going to form for just one single day. When it is on 4 hours too, it means one candle is going to form for 4 hours. Then once it's the fourth hour, it's going to stop forming. Then once is another fourth hour, every 4 hours, it will start its life and end its life. Every 4 hours, it will start its life and end its life. Another candle come again, start its life and end its life for 4 hours. So 1 hour and 1 hour multi-time frame. Sorry, 1 hour time frame. It means a candle is going to form for just 1 hour and end its life. So this is the current candle. This is the current candle, as you can see. It is still moving. Once it is 11 o'clock, this candle will stop moving and then another candle starts moving. So that's the way it is. 30 minutes to candle will move for 30 minutes. Once it's the 30th minute, it's going to stop moving. 15 minutes. So that's the way this multi-time frame analysis works. That's the way it works. Different candles forming at different times. So 5 minutes also, it means one candle is going to form for 5 minutes. Can you see? The candles are now a lot plenty on 5 minutes. You can see. But when it's on 15 minutes, the candles are not really plenty. Can you see? When we go to 30 minutes, the candles are not also really plenty. You know, the bigger the time frame, the smaller the candles. The smaller the time frame, the plentier the candles. You know, when the market's candles are forming for just 5 minutes, you know, it's going to form faster and close faster on 1 minute time frame. So let's go to the 1 minute time frame to just have a practical example. All right, so this is 10:22. Once it's 10:23, this candle will stop forming, and then you're going to see how it is going to stop, and then another candle starts its life. So let's wait patiently. This 10:22. Once it's 10:23, just keep watching. Just keep watching this place. We're still waiting. We're still waiting. We're still waiting. We're still waiting. We're going to 10:23 because this is 1 minute time frame. Just to have practical example, because we can't use 5 minutes time frame to be too much. We can't use 1 hour. We have to wait for 1 hour. So let's just do one. Let's use 1 minute, the one that is very fast. So this still 10:22. We are still waiting. 10:22. We are still waiting. 10:22. We are still waiting. Yeah, you can see another candle has formed already. You can see, you can see. So let's still check the time. 10:23. It's 10:23 already. So you can see another candle has formed. It has started its life. Can you see this candle has stopped? So that's what we mean by different time frames. One candle is going to form for one day when you're on one day, so and so on and so forth. So now, what is multi-time frame analysis? Use of different time frames to analyze the market, starting from the bigger time frames to the smaller time frames. Now we're starting from the one day. It means one candle is going to form for one day. Now we have the knowledge of support and resistance, breakout and retest, everything. So we want to analyze the market starting from the daily time frame, because if we can get, we've talked about downtrend and upward trend soon. Now, if we can get the market move, if you know that okay, this market is going to move in a downtrend on the daily time frame, it means when you want to take a trade on the smaller time frames, you should be looking for a sell, right? Because in a downtrend we want to sell and in an uptrend we want to buy. So when the markets on the one day time frame is showing us a downtrend, then on the smaller time frames, so we are going to be looking for what short or sell entries. When I mean short, I mean sell also. So we're looking for sell entries. So as you can see, what I've drawn there, as you can see what I have drawn now, that is a nice trend line. That is what a trend line that I've drawn, indicating the presence of sellers on the one day time frame. It means this one day time frame is in a downtrend. Can you see? Higher low, sorry, lower high, lower low, lower high, lower low, then another lower high, lower low, lower high. We're expecting a what? Lower low. So you can see this market is not respecting the breakout and retest of the higher high and higher low, lower high and lower low. But you have an idea that this is a downtrend, and then we should be moving a series of lower high, lower low, lower high, lower low, lower high, lower low. So simple like that. So you can see it's in a downtrend. So you draw the market, so you draw the trend line above the candles. You can also draw it below, but I don't really think you need that for now. You can see, just to beautify the chart, you can see now the market is moving in this series of highs. You can draw the trend line across the highs, and you can draw the trend line across the lows. So that's very cool about that. Now on the one day time frame, we've seen what's a nice downtrend. You can see we've seen a nice downtrend. Now we are moving towards 4 hours time frame. On the one day time frame, we want to know the trend. On the daily time frame, we want to know the trend, the market structure. We want to know the trend on the daily time frame. So we move to 4 hours. Then starting from 4 hours, once you know the trend on the daily time frame like that, it's a downtrend. Then starting from the 4 hours, you start drawing all the support and resistance you can see. All the support and resistance you can see with the use of trend line and the use of the rectangle. So this is a minor uptrend inside the downtrend, because the markets will move in an uptrend before it reaches these points. So as you can see, the market is moving, will move in an uptrend to reach the resistance. It will move again in an uptrend to reach the resistance. So just stay tuned, and keep watching as I'll be explaining. So you can see here, this is a nice uptrend inside the downtrend already. So I've drawn my supports like that. This is a support area on the 4 hours. Then you move to 1 hour time frame. Don't forget. I said you keep drawing. So on the 1 hour time frame, you can see a minor uptrend again, a minor uptrend. So this is the higher low, higher high, higher low, higher high, higher low, higher high. So on this higher high here, the market is not trying to respect the higher high again. So as you can see, market is meant to do something like retest this place and then start going up like that, and then sell when it reaches the lower high on the daily time frame. But now we can see that markets has stopped these movements to the upside, and on the daily time frame we have a downtrend. It means we are going to be looking for sell opportunities. So let's move to 30 minutes. On the 30 minutes, so what do we have? What do we have? Keep drawing all the support and resistance you can see down to 5 minutes time frame. So we are drawing down to 15 minutes, 15 minutes time frame. So that's the resistance area that has been broken but not yet retested. So you can see here we're expecting the retest at this point to go up, but this is a downtrend. Don't forget the structure on the 1 day. The structure on the 1 day is a downtrend. So we're looking for sell positions. For example, like I said before, this one too is giving me sign of what reversal to the downside. So I'm going to be taking this sell at this point when I get my entries. So 15 minutes time frame too. You draw all the support and resistance you can see on 15 minutes time frame, and then we're going to stop on 15 minutes time frame. So that's the resistance on 15 minutes time frame. And don't forget the markets, what the market does when it gets to resistance. The market either gets to resistance and then starts selling, it will sell at resistance, or it should break out the resistance and then retest it and turn the resistance to support. But we're not looking for buy opportunities because the market is in a downtrend on the daily time frame. So this is how to do multi-time frame analysis. You are analyzing from the daily time frame. You just want to get the structure on the daily time frame. As you can see, this is a nice move to the downside on the daily time frame. Now moving to the 4 hours, you draw all the support and resistance you can see, just to have an idea of what is going on in the market. You can see I've drawn my trend line to indicate this move to the upside. On 1 hour time frame too, I can draw my resistance here, but it has not been retested. So I'm waiting for a retest to buy, but I'm not going to buy because this is a downtrend on the 1 day. So I'm going to wait for it to hit this place to sell, or to hit this place to sell. Like I'm waiting here already to sell. I'm waiting to sell at this point because the market has not given me entry yet. So that's just what I'm going to be doing. All right. So where did we stop? So like I said, we're just taking the multi-time frame analysis to have an idea of when to enter. Then we're still going to talk about entry and exit proper. Yeah, so this is the potential analysis. You now have an idea that okay, when the market gets to this place or gets to this place, when it gives me an entry on the 5 minutes time frame, we want to enter on the 5 minutes time frame. So we're analyzing from the daily to the 15 minutes time frame. So on 5 minutes we want to enter, but from the daily to the 15 minutes time frame, we just want to have a bias. We want to have a bias that okay, market is going to buy at this point, market will sell at this point. Now let's move to another chart. I'm going to analyze three charts. I'm going to analyze three charts so that you can have proper idea of what it means to do multi-time frame analysis. Yes, as you can see here, we have a nice uptrend. Nice uptrend already. Nice uptrend. Well, some people might be asking that why can't I go back to analyze? But what we need here is just a little bit of touch. As you can see, this one is a downtrend and that started moving to the upside. So it was a downtrend before, now an uptrend. So we'll focus on the uptrend. So it means we're going to be looking for buy opportunities on the smaller time frame. So you can draw your trend line across the lows. You can draw it across the highs also, but it's not really needed here. It's not really needed here. So we've known the buyers already on daily time frame that want to buy because it's in what is in a uptrend. So I've explained the buyers on the downtrend with CAD JPY, and I'm explaining with AUD JPY now. So we're moving to 4 hours time frame, meaning we're going to be drawing all the supports and resistance we can see on the 4 hours time frame. So let's start. Don't forget, we want to what? We want to buy in an uptrend. So we're going to be looking for buy entries. So that's the only thing I can see on my 4 hours. I'm not really seeing anything much. I'm not really seeing anything much yet. Okay, I think I can still draw my trend line here again. All right. So So I have a bias that once it touches this trend line again, giving me a low, then I can buy. But this is a resistance. So what will I be waiting for at this resistance? I'll be waiting for the breakouts, then retests. Retesting it, it is turning this resistance into a support. And what do we want to do? We want to buy at support. And we are going to buy it because the market is in an uptrend. So let's move to 1 hour. On 1 hour, what can we see? What can we see? I can see a resistance turning support already at this point. So you can see market is retesting that place already. You can see this is a nice buy opportunity already. So you can just stop your analysis there. Since you already have a bias that the market should buy from this support area to this resistance area. Very cool. That's what we call multi-time frame analysis. So you can still go to 30 minutes or so, but not really needed. But you can just go there to check if there's any minor resistance that can still push the market down. So nothing much. So it's still this breakout and retest. So at least it's market should buy to this point. You have an idea that the market should buy to this point. So that's what we call multi-time frame analysis. Multi-time frame analysis. You're analyzing from the daily to the 15 minutes time frame. So talking about entry, I'm going to be talking about entry in the next video. I really don't like these candles, but at least I'm just using it to explain. So entries in the next video. This is multi-time frame analysis. Multi-time frame analysis is just to have a bias that okay, market is in a downtrend on the 1 hour, on the 1 day. So it means whenever I'm analyzing, I'm going to be looking for a sell opportunity, or when the market is in an uptrend, have a bias that whenever you are analyzing down to the 15 minutes time frame, you're looking for buy opportunity because the market is in an uptrend. So that's the way it works. You just have a bias. Now the market is in an uptrend already and it is retesting this broken resistance area. So that's a very nice opportunity to buy from, at least to this point, to this resistance area. And when it breaks this resistance, once it breaks this resistance again, retesting it, then you can continue the buy. All right. So I think that will be all on this video. Thank you for watching. Stay tuned for the next video about entry.